Happy Monday to you on this February 2nd. Behind me, you'll see nice green grass. Some of you are not seeing that green grass. Hopefully, I'm going to send it your way. Yeah, Salt Lake City, very warm here, very surprising. You could actually wake up in the morning and hear the spring birds chirping. It's crazy. So hopefully, wherever you are, good weather's coming your way. Okay. We'd like to welcome all of you here today. We got Rachel Dash with us in the chat as well. Say hello, Rachel. We also got with us Kevin, Bill, Chris B, Tech One Trades, Cecil 6953. Hello and welcome to all of you. Hopefully you had a good weekend. I had a great weekend. My gosh, it was a nice weekend. Okay, I could get into that, but we'll just leave it at that. The two words of the day are relative strength. Had an interesting market day on Friday. Things became potentially on sale. Want to talk about actually some stocks that are kind of setting up a little bit and some that didn't even drop with some of the other things we saw in the market. We'll talk about that. Now, as we do this, we'll talk about that relative strength as an indicator as far as maybe trend and momentum, and also look at doing example trades as well. Now, remember when we talk about this, and I apologize for that title there, trading with technical indicators, also remember that with what we discuss, it's done for example, illustrative purposes only. Also remember when we talk about examples, they are just that. If we bring up options, remember that options carry a high level risk, not suitable for all investors. Also remember when we talk about the examples, they are done in the Paper Money software application. Investing involves risk, as I mentioned, and just always remember it could be unrealized gains, okay? Could be actually principal as well. And also remember when we talk about examples, they are just that. Now today what I'm going to talk about, let's go ahead and hop right in. So first off, I want to actually talk about just kind of where the indexes stand, because Friday was a pretty interesting day. Then we're going to talk about sectors. I want to follow through on what we talked about last week, kind of talk about one or two areas that actually have held up relatively well. How do we see that relative strength? Where do we see some potential trade ideas with technical indicators? Now, so first off, one of the kind of the simplest way to kind of see strength is just percentage, okay? So if we actually looked at this, and I just have the US indexes here, if I just rank this by percent from top to bottom, the one that's actually up the highest for the week, and by the way, if the market is actually pulling back, it doesn't necessarily have to be a positive return, okay? It's just whatever's the highest. Well, in this case, we actually see that the lowest returner for the week was actually down 0.8%, Russell. But you're actually going to see that the Dow, the NASDAQ, the S&P, they're all positive, with the S&P being actually the strongest. Now, when we look at the monthly returns, we look at those. Dow is actually sitting here. Let's change that. There you go. When we actually look at the monthly returns, the strongest monthly returns, and this is looking at the last 21 days, you're going to see is the Russell, okay? That would probably lead us to think that maybe is there a flag forming there, okay? Weekly softer, but actually 1 month strong. Dow is actually number third. You're actually going to see NASDAQ and the S&P. S&P on both time frames is pretty strong as well. Now, what's kind of interesting about this is when you look at the trend, okay, trend 4 on the Russell, which could be up near resistance. We have actually trend 3, price above both moving averages on the Dow and the S&P. And when you look at the weekly charts, no real damage done. Trend weekly showing 3 for the 4 indices. Now, when we talk about the relative strength over different periods of time, that relative strength, when you take a look at this, okay, the one that kind of stands out a little bit here today is the Dow, okay? That's the one over the last, let's say, 5 days or so that's gotten a little bit of a push that's been the strongest in the last 5 days. Now remember, this is compared to the S&P 500. Which S&P 500 is it? Open up the code and you'll see. All right, now, anything actually showing a bounce? Yeah, it's actually showing a bounce on the Dow, showing a bounce actually set up on the Russell. Anything that's actually a brand new whole moving average crossover? Yes, on the Dow. Gosh, seems like we said the Dow a couple times here today. And we see bull flags, wherever you're from. We're seeing bull flags on a couple of those so far. Now, let's kind of take a look at them visually on the graph. Since we said Dow a couple times, let's start here at Dow Jones. You pull out the Dow itself, this is what it looks like on the whole moving average chart. Kind of looks like a check back really to the old area of resistance. Now, remember what we said on Friday, when you have a bunch of earnings like we do, no one said you had to buy individual stocks. Someone might say, I'm just going to buy something that's trying to track a basket, okay? Track an index, okay? That is a group of stocks. You might consider that as well. Now, if you look at this, what you're going to notice is today's a pretty strong bounce off this old 487 level. We actually go back and look at this on a kind of a longer term moving average for just a moment. That's what it looks like on that 10-day exponential moving average, 30-day simple. Classic bounce so far. Look at this on a weekly chart. What does it look like? Just looks like a price bouncing off the 10, okay? That's the weekly chart, the 10-week exponential moving average with the 30-week simple moving average. Kind of lagging a little bit, but kind of gives it more room. S&P, what does it look like? The S&P 500, that is not a brand new high, but let me just count with us. Everyone count with me. 1, okay, 2, 3 red candles, and then what type of candle do we have here? What do we see? That's called a bullish harami. Wrong answer. Spinning top, wrong answer again. Bullish engulfing. Okay, now that bullish engulfing, uno, dos, tres, we actually see a little bounce to the upside on the S&P 500. Now remember, if the S&P 500 is actually pushing to the upside, what sectors are leading? I need to know. Type in those answers quickly. Now, if we take a look at this, the one that I want to point out just real quick, when you take a look at, let's say, the NASDAQ is actually held in there pretty good. Semiconductors, the stocks, they've fallen down from the highs a little bit, but there's still some pretty strong semiconductor stocks. Look at, let's say, Micron. When we talk about some of those chip names, memory chips, memory storage, this SanDisk, and this WDC, this Seagate technology, rocket ship to the upside. So some of those are actually still been quite strong. Now, let's take a quick look at, just before we look at our first example. When we talk about, let's say, sectors in general, let's kind of rank this if we set the same idea, okay? Now, if I look at the weekly returns and say, what do we got? It's the semis. DJT. What is DJT? What is that? DJT. Now, if we were on a Friday class, we wouldn't use DJT. That's an index, okay? We're looking for something where we got individual stocks that is traded underneath the ticker symbol. But for this class, we'll use DJT $, which is the Dow Jones Transports. So when we say transports, what are we talking about here? Well, FedEx, you've seen that chart. You've seen UPS. You've seen Carnival Cruise Lines, Royal Caribbean, NCLHW, Norwegian Cruise Lines, right? To just name a couple, okay, that have actually had a pretty strong push. You're going to see IXC. We actually see that's communications. That's also been quite strong. Energy has been up there. Industrials. Now remember, we say when you say transportation, you could pretty much say industrials. And one of the proxy stocks we use for industrials is Caterpillar, CAT. Okay? Financial's starting to get a little bounce back, and so is Staples. Now, the biggest actually thing with this is, did you notice here today that dividend stocks and well, let's just call them income stocks and high income dividend paying stocks hit brand new highs here today, and also value hit brand new highs here today as well. Today. Now, so we're going to spend a little time in some of these areas of staples, financials, industrials and transportation, communication, and maybe semiconductors. Okay, so this just is a very simple tool to say show me some of the returns. The reason why we use the 1 week, the week percent, is we want to see momentum. Okay, why do we actually use the 1 month? To see trend. What's the purpose of actually seeing year to date? Year to date is not very helpful when you're probably in the month of January, but if you're actually probably 2 to 3 months in, just year to date performance. Just show me your report card. When we talk about this trend weekly, which ones are we getting the push on? Many investors will probably be looking for trend 3 if you want a current trend, if we're looking for a bullish reversal that is showing up on, let's say, financials. Now, let me give you a little pop quiz. Is that in commercial banks or is it regional banks? You know the answer to that? Nobody wants to answer because you're thinking we already hit strike two. The answer is regional banks. Okay. And if you look at something like 4, that's not necessarily bad, but that's probably something where you're thinking if the investor buys in 4, they're thinking it could be a continuation, that it gets up above the prior highs and or resistance. All right, now, so really by using this one column, okay, week percent, month percent, get a pretty good idea of where that relative strength is. Now, some investors, they like to use the SPX as a benchmark to say, look, I'm not just looking for average. By the way, sometimes that average ain't that bad, okay? But some investors are saying, I'm looking for something that is above average currently, and could that trend continue? Now, let's go to just real quick a couple. Now, by the way, I just want to repeat this. Could someone just buy like transports itself? Could someone just try to buy financials itself and or regionals itself? That's an option, okay? This class is not that. We're going to look at individual stocks in those sectors and or industry groups. So now let's go to work and kind of talk about some of these. I want to start with Caterpillar just first. Has anybody been watching this besides Bill? Anybody? Okay. Now, we kind of joked about it a couple times that, I mean, Caterpillar has been a pretty good name in the area. You're going to notice that really on Thursday and Friday when it actually came down, it came down to the upward trending 10-week moving average, and someone bought it right off the moving average. You've seen that before. Doesn't mean we've done it before. That's different. Came down to the moving average, got a little bounce, came down near the moving average this morning, got a little bit of a bounce, actually decent bounce. 650, actually that was a good bounce, $27, about a 4% move from today's open price to the current price. Decent move. I mean, if we're just being honest. Now, keep an eye on that, okay? Now, our first example, I want to go to a stock example. Now, the stock example that I want to take a quick peek at is actually Cisco. Now, I want to kind of go back to this. When you look at a stock like Cisco, what would this show in terms of a trend? Would it be like a 2? Would it be a 3? Would it be a 4? Well, let's just go back and kind of take a quick peek. What would it show? Well, if we're talking about this in terms of a daily chart, it would be showing trend 3. You're kind of showing that classic run up in the price, pull back to the upward trending moving average, and getting a little bit of a bounce. That's on the daily chart, but it's also showing up on the weekly chart as well. Now remember, a lot of people sometimes struggle with flags. You don't have to, okay? You can see how do you see the pulls? The pulls are the dark green candles. And how do I know where the flag is? Well, simple. It would be the orange colored candles and or orange and purple colored candles. How do I know it's coming out of that flag? Simple. It actually goes green again. Okay, there it is. Now, we know that the stock has earnings. We get that. So the investor might say, look, I might alter maybe the position size a little bit. If someone says, it's too high, it's too high. Well, it wasn't too high this morning when we were literally tippy-toeing all over that 10-period moving average. It wasn't really that high at the 3% line, and we're about close to 5%. So we get that, okay? Now what I'm going to do, and we know that there's earnings coming up. We get it, okay? 211, all right? Now remember what I said before, is it's usually about 3 weeks-ish prior to earnings where some investors start to speculate. Now, if we're about 9 days away, about a week ago, which would be literally about 3 weeks prior to earnings, all of a sudden the stock just popped to the upside, okay? So when you're 3 weeks out, you're probably starting to watch which stocks are starting to get the move. So what I'm going to do in this example is I'm going to right-click on this chart. Let's go paper money count. Right-click on that chart. And what I'm going to do in this first example, I'm going to right-click. And what I'm going to do is right-click. We're going to go to Buy Custom. I'm going to go with OCO Bracket. Okay? Now, It looks like it's, I mean, if we said, where's today's open price? Where's the last pullback area? Well, the last pullback we actually had was pretty much Friday and today, okay? Where is that so we could all see it together? It's right around $78. So if we use kind of, for example, this as a swing trade, okay? Now remember, what color are the moving averages right now? Well, the 20 period is green, trend. What color is that 10 period moving average? Okay, it's green. Is there a bounce or a breakout on it? Well, it's showing that right there, okay? So that green dot is showing close above the high of the low day if we're in the last 90 minutes. If we're not in the last 90 minutes, this is what we call trade above the high of the low day. It will show that dot even intraday like we are now, meaning we're not at the close. Now, what I'm going to do is I'm going to go down to Data GTC. Let's set the stop underneath that 78 threshold. Now, because there is some earnings coming up, the investor might say, I'm going to cut that position a little bit. Now, by the way, on this, I'm going to try to give even a little bit more wiggle room just in case. Going to give it an extra 1%. Normally on any stock over $50, below $50, it's 3%. Above $50, 2%. So we're over 50, normally go 2. I'm going to give it a little bit more room because of the earnings, 75.68. Okay. Now, if we take a look at this, when we go back to the target Data GTC, okay, so this is the entry price, stop. Now remember, if the stock is purchased, the stock has a order to sell at 75.68 or less. It's the trigger to sell. This does not say, oh, it's guaranteed to get out at that price. A stop is a market order. Okay? That's the trigger to sell. Now, as far as we look at this, what type of pattern do we actually have? Now, pattern, if we kind of take a look at this, now that's not the purpose of this class. Rachel teaches the pattern class, but we are trying to get an idea if we have some indicators, relative strength, bounce. We also have a shorter term breakout. I'll show you that in just a moment. And flag as well, price pattern. If we kind of look at this, we kind of have the prior high about $80. Where's the bottom of that? 73. Potential continuation. If we said if it went up to that, well, it'd be probably right around $87. Do we have any idea if it's going to go up to that area? No, you're forecasting. You're actually thinking that it could, okay? Now, forecasting is not new in our life. We buy a house, we buy a car, we get a job, we get married to the person, we have kids, whatever we actually do, you forecast all the time. Doesn't mean it's going to always happen the way you want it to go. Now, I'm going to put this number at $87. There it is. Now, we're going to go ahead and buy, in this case, 100 shares of stock. Now, what I'm going to go ahead and do is go confirm send the order. Now, this is a stock trade. How do we know it's a stock trade? We didn't look at the option table at all. This is a straight stock trade, and we see the stop below the support area. Now, here's the deal. We're going to go to the next chart in, okay? That next chart in is really going to show us the 3 lines. What's the purpose of the... Now, by the way, this first chart is really just showing momentum and trend in the form of a 10, 20-day whole moving average. Shading is very nice because it gives us an idea of who's in control right now. This very next chart is now applying not just the momentum and trend and bounce, hold dots, it's showing the highs. So remember, this orange line, that is really looking at what day's high. The answer is to that question, what is it? Well, this actually, if I kind of put my cursor right there, that's a 20-day high. The blue is a 20. If I put my cursor on the orange, it's a 10-day high. Now, why the difference? Well, because if someone said, James, I wait for, let's say, a 55-day high, which is over 2 months of trading, to finally get in, all that entry signal would be delayed. Do you like to be delayed? Okay. Now, sometimes I joke the only time that sometimes people will actually be on time is to their own funeral. which sometimes is true. Okay. Now, for a technician, they might say, look, I want to actually be in when actually there's a reason to be in. You're going to notice the first time that we actually trigger this is on January 23rd, we hit that line. Why did the line bend higher? Well, because the high of the last, let's say, 10 days was higher. So that would have been the first day it would have triggered. Some investors like to get in a little earlier, okay? Early doesn't mean bad. It's just a shorter duration to show earlier signs, okay? Now, the blue line, when did it happen? The very next day. So this second chart in is really just showing us, look, we have a momentum trend, we have a bounce, but we're also hitting breakouts. What happens when you're hitting all three lines? Well, you're hitting the 10-day high, 20-day high, 55-day high. The purpose of these charts is to help you see the indicators on the chart and you stop second guessing yourself. Does that make sense? Now, comment is JB or other coaches avoid talking about bearish setups. Oh my gosh, that's a bunch of malarkey. So if you ask me, what do I like? I like bearish setups. Well, why don't I talk a lot about bearish setups? Well, because if you have a market hitting brand new highs and you tend to do more bearish setups than bullish setups, you don't tend to do very well. How do you know that? Because I've done this for almost 30 years. If you ask me, like James, like what type of short trades do you like? Short stock, short synthetics, short call vertical, long call vertical. But let's not be foolish here. If the market is up, does the investor potentially, we're just throwing this out there, does someone do potentially better being bearish or bullish? It's a question, right? It also comes down to what type of accounts do you have, right? What if you're in a 401k? Well, you're not doing shorts, okay? You'd have to have a margin account, right? To do some of those type of trades and level of option trading clearance, right? So some of the classes I teach, they're not at that level, right? So if the market became more bearish, like I talked about, like on precious metals the other day, I mean, I flagged it Thursday night and said, hey, watch out, okay? If I see that, I'll talk about that. But let's be honest here. If you have a bull market, sometimes the stocks can crash to the upside like they do to the downside. Let's not be foolish here. Okay. Now, I want to go back to just real quick one other stock. So I want to go back to just transports just real quick. Okay. Now, if we take a look at this, this is what transports is showing. Okay. There's transports. Okay. Now remember on this chart, we got trend, which is we use the 20 as the proxy. The 10 is the momentum proxy, and the green dots for showing bounce. Okay. Now that bounce could be close above the high of the low day and or CHG, close higher gap. And those lines on top really showing us a brand new high or highs based upon the duration of time. Now I want to go back to just real quick CCL. And if I look at, let's say, CCL example given, let's go back to that first chart for just a moment. What type of pattern do we actually have on the chart? Now, I'm not the best technician, okay? And if we look at this right here, a little run to the upside, a little yank back. Now, that one right there was kind of more your classic cup and handle, but it didn't hold. Then we actually come right back down right there. We make a low, and we run back up, pull back down, and we're getting a little bounce. So here we are again, knocking on the door of resistance, okay? Now, a couple things might be said is, a comment came in from the chat was, I sold my CCL today. Why did you sell the CCL today? Well, someone might say, well, I sold the CCL because I thought we were at the area of resistance. Now let's go back, let's double check this just real quick. So one of the examples we did is we sold a put on this, okay, in the IRA. Let me double check the margin account. I don't see it. Do we have anything in terms of RCL? No. NCLH? No, not on that. Just double checking. No. So the trade was actually on CCL itself selling a put on this. Now, its twin cousins, RCL, which is Royal Caribbean, and NCLH, Norwegian. Now, if we kind of look at these, when is the earnings? Earnings is on the 26th. Now, let's say the investor said, James, I think this candle looks pretty big, and I think it's too high. Look, the whole point of the charts is we stop saying, I think it looks too high, and go bring out the tape measure. Well, if we go look at the tape measure, how high are we? Well, on the Norwegian Cruise Lines, yeah, we are at the 8% line. Right-click on that, 7% line. We're at it today. Where was it this morning? Its fanny of the candle was sitting right on the upward trending moving average. That's why the first hour is so critical. Okay, don't just tell people don't call me, don't text me in the first hour. Okay, another one sitting right there had a nice little surge intraday tall hold intraday as well. If we kind of said which one might be setting up a little bit more that is not, maybe. If I look at, let's say, the RCL as well, they're all high a little bit right now, okay? When you look at the CCL, that's over at 7%. So if we looked at all of them right now, we'd have to say that the investor might say, James, if I'm going to buy, I'm going to need a little bit of a pullback. Well, one of the purpose of these lines is to say where to. Well, if someone's trying to buy in a shallower pullback, there, which matches the red line. What area of the pullback? There. What area of the pullback? There. Okay? So those would be areas where the investor might say, look, I'm trying to get in, but I want to get in on a little bit of a pullback to where we're not as elevated off the support. Now, some investors say, look, I'm going to sell if we hit resistance. Other investors say, what resistance? I don't see anything. Okay. Now, what we're going to show, if we're going to try to buy in a little bit of a pullback. Now, what we know for sure is stocks go up and they go down to some varying degree. Well, what we're going to do is we're going to right click on this chart. We're going to go to actually where it says buy custom, and we're going to go with OCO bracket. Now, if you're not using these moving average envelope lines, I feel bad for that investor because they're just succumbing to emotion. Okay. Now, quick reminder, the 10 is what you'd expect, the 10 exponential. Gauge of momentum. Remember, 3% yellow, 5% red, 7% white. Okay. Now, remember on Thursday and Friday, we kind of talked about maybe, hey, could some of these precious metals be actually elevated? They were north of 10%. So the investors trying to buy is saying, look, when I see something up that high off the percentage, up that high off the 10-day exponential moving average, chances tend to be more likely that it pulls back. In the short term, that could be bearish short term, not intermediate, but in the short term, okay? And you're going counter trend. Now, what I'm going to do is on this order is where I right-clicked right at the red line, dated GTC. So what does the investor really want here? They want the price to come down a little bit. Now, if the stock right now is at 32.23 or so, and we want it to come down to 31.53, 70 cents on a $32 stock, it's about 2%. It's not crashing, right? But we're thinking, hey, if the stock actually came down to that price, could it buy at that price or less? And then could it go back to the upside? Now, why are we even looking at this? Well, because there's a lot of, if the transports continue to break out to the upside, some of these stocks are showing a U pattern. The U pattern, you actually look at this, you got 28, and you got, let's say, 32 being the resistance area. Well, that's $4. $4 on top of this, that might be a potential 36. Now, we don't know if it's going to go there. We're about ready to find out. Now, we're making some assumptions here. What are the assumptions? Number one, that the price might pull back. Wonder if it doesn't pull back. Okay? Wonder if it doesn't pull back. Well, that investor might say, I'm not going to buy elevated. Okay? So that's the bad part. If this stock gaps tomorrow and it doesn't go down to that price, it could just leave this trade in the dust. It's wanting the stock price to pull back a little bit. Target, if it is able to fill, target at 36. Stop. Where is that? We're going to set that underneath today's open price. And remember, how do you see these higher lows? Simple. Where are the red and green candles? Circle them. Step number one. Red, green candle, side by side. What's the red candle for? Why do we care? That's where you pull back. The green candle, that's where you start going up. That's what we call higher low. Now, but where? Do you take it from the low? Do you take it from the open price? The answer is we take it from the open price. And that open price, if I put my cursor on it, where are we at? Today's open price, answer is 3018. We'll take 3018 less 3%. And that's going to give us a stop of 29.27. Let's go back and type it in. 29.27. Confirm send. Now notice on this order, this is GTC, good till canceled. Okay? Now, the target and the stop are based upon the order filling. The sell orders are not allowed until the order is filled to buy. If the order is filled to buy, the stop is saying sell if it goes to that price or less. Is this a stock and option trade? We don't see anything about expiration, strike, nothing. Calls, puts, nothing. This is a straight stock trade, okay? Now, the other comment says when oil energy was rising, price on these stocks was going down. La la! Thank you. Thank you, thank you, thank you. So if someone is actually maybe going, let's say, now, by the way, what other, we talked about crude oil, okay, the other day, right? And I even posted about that on Thursday night. If someone actually thinks that crude oil might come down a little bit, what else might get a little bit of a push? Well, the jets, United Airlines, Delta, Alaska, the one that we'll just circle back to is Love. Speaking of Valentine's Day coming up. Now, one of the stocks that was not loved for a long time was Southwest Airlines. Some might have said it's archaic, okay, in terms of how they do stuff. You buy a ticket, you can't necessarily get your confirmed seat. You maybe could, but for the most people, you just line up like cattle, and they didn't really like that, okay? I'm not going to say I did or didn't. I don't fly Southwest that much. Historically, maybe. But some people like knowing I want a seat, dadgummit. Now, one of the stocks has gotten a little bit of a push is if you take a look at this, a little push to the upside, not much of a red candle there. Only one of them, and then another little green candle. Now remember, wait, you pop to the upside, and then all of a sudden, you only go down for one day, and that's all the selling you got? And those bulls see another green candle after that? If they're sellers, those buyers are mopping up those sell orders to buy and then trying to knock the price higher. Now, could someone say, James, I'm going to take this midsection and use this as an area of support on this big green candle? Yeah, some investors buy it. Could they maybe set a stop underneath that red candle low? Yeah. Could maybe someone take that stop underneath today's low as well? Those are three areas where someone says, if I'm going to buy a little elevated, I'm going to buy elevated but set a tighter stop if they're doing a stock trade. Now, if we're talking about selling some pets, now, did anybody notice this morning the VIX, and we've said, I pulled my hair out, but I don't have that much hair to pull. We said if the VIX goes to 18, some people like to step in and sell, and sell some more. Now, what type of selling? Premium. Now, the dadgum VIX went north of 18 and barely made a brand new high, and someone started selling immediately. Makes you wonder if they went to our classes that we actually did over Christmas and New Year's, okay? And man, it just went right back down. And again, when VIX gets above 18, we get so nervous that we actually stop thinking about mathematics of probability, okay? There's actually a formula for what's called the mean reverting level. And the higher you get away from the average, the mean, or the median, the greater statistical chance, mathematically, that you come back down to the middle. People are trading not emotion per se, but in the way they are, they're really trading the math. And when you think about investing, it's really about math. Now, if we come back to this, let's say the investor says, James, I want to go back in that love for just a second. Let's take a quick peek. Let's say the investor said, you know what, James, these 20 Februaries are going to expire in 18 days. No spank you. I want to get a little bit more time. Now, the ones that we tend to look at, per the sample plans, 20 to 50 days to expiration, we tend to focus on monthly options first. Well, that's actually going to be the 20 March. Now, how does March sound to you? Many of you are saying it can't come soon enough. Okay. Now, what I'm going to notice is I'm going to go over here to the right-hand side, the put side. And what we're going to show in this case is we're going to go sell the strike with a delta of 30 to 40. Okay. Now, remember that delta of 30 to 40, it's a dual meaning, right? It's saying what's the probability as of right now the stock will be 1 penny below the strike. Okay, number one. It's also saying it's the translation of if the stock went up or down $1, how much approximately would the option move by? Well, the stock goes up $1, the put would go down 35 cents. Okay, if the stock went down $1, the puts would increase by 35 cents. So what in this case is we're going to right click on that 47.5, sell vertical. Now, this is not your typical vertical that we might be thinking about. If we're doing this in an IRA and we don't want risk down to, let's say, 0 on the stock, the investor might say, you know, James, I'm going to sell the 47.5, which is the driver. We want the stock to stay above the 47.5 because that's where the obligation is and that's where the big chunky premium is. But the purpose of, let's say, example given of buying the 37.5 is just what this sounds like. When we sell the put, buying at 47.5 potentially, buying a put, selling at 37.5. So buy at 47.5, sell at 37.5. Well, if you did that, mathematically, it's just $10. But you also got a $1.48 credit. So that's going to give us the maximum gain, just being the premium, max loss, even if the stock went to 0, 852. And now what we're trying to do, the investor might say, James, I'm going to try to trade the direction, the time decay, okay, and also maybe the volatility contraction. Now, can the volatility on the stock be influenced by what's happening in the market? Of course. Okay, sure. So now what we're going to go ahead and do is say, look, how much do we need to set aside to do the trade? Well, whatever the max loss is, $852. Since we're buying a put too, it's $1.30, 65 cents per contract. Trade number 3 here, send the order. Now wait, hold on just a sec. Did we do 3 trades? Well, let's go back to the monitor tab and let's confirm. Did we do 3 trades? Okay, or is it 2? Cisco was actually number 1. Okay, so the comment is that is a high max loss. Well, it's a high max loss. Is it 2 or 3 trades? Okay, well, we did Cisco, we did CCL. Okay, now I'm talking about filled orders. Okay, so filled orders, we got Cisco, that filled, Love, it filled. Okay, now I remember when I was doing an in-person event down in LA, and the person said to me, I would never do cash secured puts because, well, the risk is too big. Well, I told the person, well, why are you buying shares of stock? I mean, the risk is all the way down to 0. That's the truth, right? If I buy shares of Apple for $220, what's the risk? It's all the way down to 0. Now, the difference between stock and option is one has an expiration. That's a big part, okay? But the biggest actually thing is it's defined, okay? So when someone looks at, let's say, any probability type trade, there's always going to be a smaller number, a high probability based trade. There's always going to be a smaller number divided by a bigger number. The purpose of that 37.5 is not just to make a built-in maximum loss. It's to tie up less capital, okay? So if someone said on that one Love trade, how much money are we tying up? The answer is $897 or so. We're trying to have more capital available to go do other things, okay? Now the comment was Cisco a stock trade? How can we read that? Well, there's no expiration, there's no strike, and bang, it says stock trade. But what about the CCL? It's in the working orders. There she is right there. It's working. Why? Well, because we said it's a buy limit order, okay? So we got 2 trades that filled, and we have 1 that is pending. Now, what I want to do is I want to fast fire around a couple stocks or so, and I want you to kind of tell me what you're seeing. Now, one of the other stocks that's kind of been a little interesting is Intel. Now, Intel, they actually said, look, our sales are softer. The stock actually got down after a massive run. When I say massive, that run from the crossover down there where the investor says, I wish I would have bought, and if I would have seen it, I would have got in. That's what they said. It's not what they said, it's what they did. That run right there was 54% going in earnings. 54%. Uncle, okay? And now what you're going to notice is, yes, it gaps down, but the old resistance being new potential support, okay? Yeah, it's interesting. Got a little cross. Let's put a little X right there. There's 1. And then right now what we're seeing is the nose of that candle poking itself above the 20-period moving average. Now, let's do 4th trade example. Now, I got to work on my French. Next summer, I'm going to be over with my wife for a month. We'll be close to that French border. Okay, I'm going to, got to work on that French. Here I come. Now, the biggest actually thing is I'm going to go back to when I look at Intel for just real quick. I'm going to do this one fast, but I'm going to show this without the downside protection. If someone says, hey, I'm going to sell, now look at this right here, the 49, 45 delta, 42 delta, 39 delta, 36 delta, 33. If someone says, look, I like kind of in the middle there between 30 and 40, well, that would actually be in this case, the 47.5. If I do 47.5, click on that. We're going to go over here right there to the mid price. Now, wait, what happens if we just sell by itself? Well, the max loss is going to be bigger. Okay. So if we sell the put by itself, the max loss is not $800 or $900 or so. Typically, it's all the way down to 0, which is like a stock trade. Okay. This is different because there's expiration noted. And if we said, look, I don't want to do that. I want to kind of not tie up as much capital. Well, let's quickly change it. Right click, sell, vertical. So the moral of the story is got to risk something to make something. Oh, wow. What a revelation. Now what we're going to do is going to come down to, let's say, the delta of, let's say, 10 or less. And the first one we have is the 41.5. Well, if we got a $6 wide spread, less the premium, what is actually going to be, in this case, the max loss? Answer, 460. Okay, there she goes. Now, what I want to do just real quick. So let me change this. Okay, so that's the February expiration. And what I was actually looking at was that volatility. But how do you change that? How do you change that? Well, if we go just right here to the March and said, look, what are those actually trading for the March expiration? Okay. And if I looked at that right there and said, what do we got there? Is it going to be much different? Not much. We're just going to go from the 47.5 to the 47. And if we said delta of 10 or less, it's the 38. That one will be a little bit more, 38. Credit. Why is the credit bigger? Well, you got more time. Okay. March expiration, monthlies. Okay. Confirm send. And there it is right there. Now notice that commission, okay, as well. $1.30, selling the put, buying the put. Can never get one passed on Pia. Too good. That's why she's the pickleball champion. Okay. Yeah, I'm getting sick of seeing you holding trophies. Pia, give him a chance, for crying out loud. Okay, now what we're going to go ahead and do, trade number 4, sell that. Now, remember, if we look at this, and I'll fix that order, what do we got to say here in closing is this is where the investor says, look, I think we might try to go back up and fill the gap. The gap went down to there. This is where the gap started. Could it try to fill that in? All right. Now, I'm out of my time here. I just want to say a couple things. Keep an eye on a stock like Apple. We talked about that last week. Could that be a reversal? Today, poked its nose above the 260. For some, they might say that's a reversal. We talked about the WFC being a potential bounce trade. A pretty decent bounce so far going on in that WFC. if we kind of said, what is the dark horse on the outside that might be trying to get a little push? It's Target. Its twin cousin, the blue company, Walmart, banging its way to the upside, and that red company, not as much. But the stock recently has had some of the stronger moves we've actually seen. Keep an eye on Target. Now, I'm out of my time here today. We did 4 trade examples. I want to thank you so much for your comments and your participation. Remember, our examples using trading with technical indicators was done for example, illustrative purposes only. All investing involves risk. That's why we set stops. That's why we try to have max loss built in. I'll be in throughout this week. And thank you so much for your comments and your participation and coming to this class on trading with technical indicators. And again, stay tuned for Cameron May coming up next. If you have not subscribed, subscribe. I wish you a great day, and I'll see you back tomorrow morning. And thanks, Rachel, as well. Take care. Bye-bye.